One MATIC is currently valued at $1. Talking about stablecoins. But to get to that $1 in the last month, it had to rise more than 57%. Let's dive into the charts of Polygon versus dollar and let's see where the price is heading in the coming days, weeks, and what is really going on behind the scenes. Welcome to Cryptasic Park. Thank you for still being a part of this video. I will give you all the answers that you need regarding the price of Polygon. We are working on a daily chart, so taking a short-term approach. And for those of you who are still wondering, in the short term, are we in an uptrend or a downtrend? We are in an uptrend. Why? Because this downtrend that was holding for weeks, the price of Polygon is now over. Resistance, 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 resistance. Here we broke it more than a month ago, and even better, he retested the trend line and made an uptrend. This is the uptrend I am talking about, and this is the uptrend that is still ongoing. So short term, Polygon is bullish, but as always, I will give you a word of warning after we describe this bullish case which actually still exists. You know that if you are investing in this space, that it's not always sunshine and rainbows. You have to reality check yourself from time to time. I think this is about that time. You see, as I said, we have to talk about Polygon's $1 as a factual bull case. This line is still unbroken. When it will be broken, and at some point I expect it to be broken, you will have to embrace the bearish case. Now I want to discuss about some levels, very important on this chart. Number one, the level of 95 cents, very important. We must discuss this. This is a touchy subject. What is happening right now regarding that 95 cents? Can you see that with today's candle we are breaking it to the upside, so it's getting super bullish, or so it seems that way. Now this candle is still not closed, so if we go to retrace beyond that 95 cents, which is shown here on the screen, it could get really bearish, because this would then indicate a false breakout to the upside. So don't get too excited when you see a candle like this. It needs to close, number one. Number two, the second day, it needs to have that some follow through. Why this is an important level? Well, you can see why. Here, when we broke to the upside, that was our first resistance, and almost a month this was our resistance that with today's candle we are breaking. So it could get even more bullish than this, just following this. So let's not exaggerate. This is looking nice. 95 cents. Remember that line. If we fall below it, price prediction is that we are moving into the lower regions. So I'm gonna give you one, very important one, which we will reach if we go back below 95 cents. The first level to watch is 73 cents. Here it was a resistance. A few days ago it was a support. Okay, 73 cents. But that is not so important as the next one. 60 cents, ladies and gentlemen. It is a reality. If we dive below 95 cents one more time, you can see the points of resistance, very big cluttering of the price around that area. So I'm giving this level a high importance. 60 cents. Now, after dipping below 95 cents, when we go and touch break 73, 60, we must talk about extremes. And yes, there is still a possibility of you going to that 34 cents that we touched here in June. I know that from this point it's not looking so real, but if the market, Bitcoin especially and Ethereum, decides to make a plunge one more time to the downside, it is a possibility that you will see those lower levels one more time. So I don't want you to have that mindset that although it does look strong on the daily chart, can do this and follow the path. I'm talking we could go to 73, 60 and even 34. Now remember, we are still marginally bullish in the long term. I would say even bearish, because the whole market is bearish. So don't get too extracted in the future by looking at this beautiful candle that we are forming today Yes, it could give us some possibilities of going to the upside in continuation, yes, but I want to play it on the safe side and tell that all those levels are still a possibility. 73, 60, 34, I wouldn't say never. There is a possibility, and that's why I'm here for. But facts are the facts. This is 21, daily simple moving average. That is clearly stating us the story that goes something like this. This was the time of bearish price behavior, vice versa. The time we are living right now, after we broke that 21 moving average to the upside, retested it here, 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 we are bullish. So short term, we must talk about bullish price action and the possibility of going higher. I won't give you levels, but I will give you a warning sign because of those levels that I just mentioned of going to the downside, why that is a possibility. Until now, we discussed only the bullish case. How about the cautious side? Volume. After we put that move about a month ago into the region of $1, it's getting weaker and weaker, the price action. Why? Because the volume is getting lower and lower. Look at this, it's not my imagination. This lower is getting lower and lower, and the price action is kinda barely getting higher and higher. So this is not strong movements in the last couple of weeks. So volume is giving me some hints. Good things might be coming, but I would be more comfortable if the volume would get higher and not lower. So play it safe. Do you want to enter right now? I'm not so sure about that. The time was around this area, 50 cents like. But right now, yeah, you could be making some money, but it's not so safe as it was a month ago. Okay? But a final verdict, why you should be careful, is this line on the bottom. Look at this, relative strength index. Let's pull it up and let's say what we have to say. It is pretty simple. This was that point on 18th of last month when we reached the peak that was in an overbought area. That was a first sign that it could be starting getting heavier and heavier to the downside, and it would be merely difficult for the price to move to the upside with the full momentum that it had until that point. But the biggest point of my concern is this. From that point a month ago, now we are having lower RSI than here. We are not in an overbought area, but we are doing what? Diverging from the price. I'm talking about this. It's getting weaker and weaker, MATIC. But the price action is not showing us this. The price action is acting like it's getting higher and stronger, which in reality could not be the case. RSI is showing some weakness. It's up to you. Will you act according to it? Would I buy MATIC right now? No, I wouldn't. It's too dangerous. According to these signs, it's not to say that they must play to the teeth as I just projected. No, the trend is bullish, but it's getting weaker and weaker. This was my short-term approach on the Polygon, and what I said about this coin a few months ago, check out in this video. Click right here. It was a different sentiment, a different crypto market setup. So it could be interesting for you if you just entered. Thank you for watching. I'll see you in that one.